I'm Royce Aguilar, part of the research department. I'd like to discuss with you our market outlook for 2020 and the key risks we're looking at, after which we discuss to you our top sector picks and stock picks. So as for market outlook, year-end, we do expect the market to trade at around 8,950 to 9,150. So it's hinged at better economic assumptions. First is we do expect stable inflation from here on. Number two, we do expect the delayed budget approval, which we experienced last year, is now already out of the woods, given the approval of the budget for 2020 early this year. Another is we do expect low interest rates given the cuts last year, and that helps corporate lending activity. Now, moving on, in terms of valuations, given where the market is trading right now at around 14 times PE, that's significantly lower compared to our expectation of 16.8 to 17.1 times. So that tells us that there's really opportunity for earning in the equities this year. As for foreign activity, foreigners are currently light in Philippine equities. So bottom line, if they want a higher yield for this year, given the US activity already shooting up significantly, they would go to emerging markets, and one of which is Philippines. So as for the risks we're looking at in the market in 2020, we're seeing several things. So first is regulatory uncertainty, which dampens sentiment in select stocks. Second is trade conflict. So of course, we do see that there is progress between US and China, but should it worsen moving forward, that's a risk in global market sentiment. Another is the nCoV, the novel coronavirus. Should it extend at least for half of this year, that dampens global economic growth and eventually our country's economic growth. As for sector pick, first up is the consumer sector. We like the consumer sector this year because we believe that most stocks under the consumer sector will have a margin recovery amid the downward pressure on their costs compared to what they faced from the last couple of years. So to be specific on which consumer stocks that we like, first up is Robinsons Retail Holdings Inc. Our target price for that is 88 pesos. It's mostly because how they turned around Rustans in just 9 months. So we liked Robinsons Retail way before it acquired Rustans, and as of the moment, should the trend keep up, Rustans will further boost Robinsons Retail Holdings margins moving forward. Next, we also like Wilcon, mainly because of how aggressive it's expanding its stores. So our target price for that is at 20 pesos. Another thing that we like about Wilcon is how it's building its in-house brands. It's better for margins, mainly because compared to when it was importing its raw materials in China before, now you have lower costs and higher margins moving forward. Another stock that we like is Pure Gold. Our target price for that is 54 pesos, mostly because of the stable inflation and specifically the lower price of rice. It benefits mostly its low to mid-income household, which is Pure Gold's target market. Another thing is it owns SNR, and SNR is now the higher margin business of Pure Gold. And fun fact, as of 9 months, 23% of the revenues is now coming from SNR. So should the trend keep up, it will further boost the margins of Pure Gold. Another stock that we like under the consumer sector is URC. So our target price for that is 166 pesos. So besides URC trading significantly low compared to its historical valuation, we also like URC because of the recovery of the coffee business. Its coffee business, in terms of market share, in terms of the gains in market share, is poised to be more visible as the months go by. So another sector that we like is the property sector. For the sector, we do expect sustained momentum from its rental portfolio. Of course, there's key risk in the POGO space because now it's in the eyes of the government, which can dampen sentiment moving forward. So the stocks we're going to mention have limited exposure. The stock we like under the property sector is RLC. Target price for that is 30 pesos. So beside RLC having a limited exposure in the POGO space, to be specific, less than 3% last year, we do like the fact that its domestic business is poised to grow after a limited amount of launches in the previous years. Next is SMPH. Our target price for that is 46 pesos. We do like the fact that SMPH has less exposure in the POGO sector, and also we're taking into account in our number the reclamation project which just got approved late last year. Also, we do like SMPH because it's expanding in Manila and in less saturated cities. Next stock is Ayala Land Inc. As for Ali, we do like the fact that its residential space is recovering from a lackluster mid-2019. Besides that, it can benefit from REITs, it can raise funds from, and can reinvest in its next projects. So those are the stocks that we like under the property sector. The last sector that we like is the banking sector. We assume that loan growth will return to mid-teens, mainly because of the economic recovery and better overall credit demand. The stock that we like under the banking sector is BDO with a target price of 168 pesos. We do expect corporate lending to improve for the bank and also the SME segment, which BDO is leading on. Another stock under the banking sector, which is a recommendation of our research partner in Singapore, DBS Bank, is Metro Bank. The target price for Metro Bank is 83 pesos. They like Metro Bank because it's hinged on a better banking environment this year, and Metro Bank is cheaper compared to its other peers. So those are the stocks under the banking sector. Another stock pick of ours, which does not belong to our top sectors, is SM Investments Corp. Our target price for that is 1,242 pesos. It is hinged on the fact that SM is one of the less regulated stocks compared to other holding companies. Also, take note, SM's earnings will likely sustain its double-digit earnings growth driven by its banking and property segments. And that's it. So to wrap it all up, keep in mind that our year-end target is 8,950 to 9,150. It's hinged on better economic assumptions. The key risks we should watch out for the likes of NCOV, regulatory uncertainties, and risk in the geopolitical space. Another thing, our top 3 sectors are consumer, property, and banking. Again, I'm Royce Aguilar, part of the Equity Research Department, and watch out for our reports that we upload in our website, daily, weekly reports, and Traders Playbook. And also, keep watch of our events like the monthly wrap-up where I discuss to you what happened in the previous months and our outlook for what comes next. Thank you.